Oil just spiked 8% in a single trading session, and if this Iran conflict lasts longer than 3 weeks, your portfolio could lose 20% of its value regardless of what stocks you own. Look, I know everyone's talking about the Iran situation right now, but here's what nobody's telling you. The only question that actually matters for your money isn't whether there's conflict. It's how long it lasts. And the difference between a 2-week skirmish and a 6-month war could mean the difference between your portfolio growing 15% or collapsing by a quarter. Today, I'm breaking down exactly how different war duration scenarios will affect your investments, which sectors will win and lose, and most importantly, what you need to do right now to protect your money. So let's start with the baseline scenario, a short-term shock lasting 2 to 4 weeks. This is what markets are currently pricing in, and here's what happens to your money. Energy stocks spike immediately. We're talking companies like ExxonMobil, Chevron, and ConocoPhillips seeing gains of 10 to 15% within days. Oil prices jump to around $95 to $105 per barrel, which sounds scary, but here's the thing. It's temporary. We saw this exact pattern in 2019 when Iranian facilities were attacked. Oil spiked 15% overnight, energy stocks rallied hard, and then within 3 weeks, everything normalized back to previous levels. Defense contractors like Lockheed Martin, Raytheon, and Northrop Grumman get a moderate bump of maybe 5 to 8%, but nothing dramatic because short conflicts don't require massive new defense spending. The real story in a short-term scenario is tech stocks. They actually recover pretty quickly. After an initial dip of maybe 3 to 5% in the first week, companies like Apple, Microsoft, and Nvidia bounce back because the fundamental business isn't affected. Consumer spending stays relatively stable, supply chains aren't seriously disrupted, and the Fed doesn't need to change course on interest rates. Your action plan for the short-term scenario? If you're already diversified, do almost nothing. Maybe take some profits on energy stocks if they spike 12% or more in a single week, because that's usually unsustainable. Keep your tech positions, they'll recover. And here's the contrarian move. If quality tech stocks drop 5% or more on war fears, that's actually a buying opportunity. In 2019, Amazon dropped 4% during the Iran facility attacks and then gained 18% over the next 3 months. Now let's talk about the medium-term scenario. A conflict lasting 2 to 6 months. This is where things get more complicated and where most investors start making expensive mistakes. In this scenario,